Ladies and gentlemen, welcome back to the channel. We have established many times here now in the last couple of videos that AMC stock really doesn't have any negative catalyst going for itself for the next couple of months, unless earnings are bad. Now, how does AMC typically perform before and after earnings? Well, let me just tell you right now. Tends to be pretty bullish. Maybe this time's different. There's only been one time where AMC has not been bullish around earnings, either before or after earnings. And we'll discuss that here in this video. We'll also go over all of the data that you guys need to know, as well as the lineup for next week, because next week is going to be another jam-packed week with stocks like Apple that report earnings as well, and the Fed meeting coming on May 3rd. So let's get into all of this information. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comments section. So first things first, will AMC report negative earnings next week? What you should know. AMC Entertainment is expected to deliver a year-over-year increase in earnings on higher revenues when it reports results for the quarter ended March 23rd. Goes on to say the earnings report, which is expected to be released on May 5th, might help move the stock higher if these key numbers are better than expectations. On the other hand, if they miss, the stock might move lower. The consensus estimate is for AMC to post quarterly losses of 17 cents per share in its upcoming report, which represents a year-over-year change of 67.3%. Revenues are expected to be $936.05 million, up 19.1% from the year ago quarter. The revisions trend for AMC. The consensus EPS estimate for the quarter has been revised 3.85% higher over the last 30 days to the current level. This is good. This is very good, because their estimates are actually going higher, whereas stocks that just reported earnings, like Tesla, like Google, like Amazon, like Microsoft, all of those companies, their earnings estimates have been going lower. Think about something like Intel that just reported their worst quarter ever in their history of business, their biggest loss ever. Their estimates were going down. So even though they beat, like Intel beat their earnings estimates, because their estimates kept getting lower. So they were just needing to jump over a smaller bar, while AMC has a larger bar to jump over because their estimates have been going higher. But this is typically a good sign that the business itself is also doing better. So I don't expect a real shocker here to either direction. Maybe there's a chance that numbers come in better than expectations, but I really don't expect terrible numbers. After all, the box office numbers of what we've been getting have been very good. Adam Aaron says, quote, popcorn is flying off the shelves. It's selling briskly since it started its deal with Walmart. And I do expect the commentary to actually be more important here, because something like the popcorn business or the credit card business, these can add revenue over time. So these can be kind of your growth factors. These are things that AMC now has that they did not have back in 2018, 2019, before then, when they seen their peak numbers as a business, right? Around $5.5 billion of revenue is where they peaked out as. Maybe this popcorn business itself could add hundreds of millions of dollars a year. That would be very positive. After all, popcorn has a very high profit margin. This might be what AMC has been missing the whole time to actually get their profits up there. AMC's profit margins have been terrible, way worse than the industry standard. And we've talked about this in the past before, but I think AMC is a much more lean business now, and their numbers should look a lot better. For an example here, something like Cinemark, right? Is it Cineworld or Cinemark? One of them just went bankrupt. The one that did not go bankrupt, okay? In a good year, they would lose about, or a bad year, they would lose about 2 to 3%, right? On a good year, they would make about 8 to 9% bottom line net profits. AMC on a good year would make about 2% bottom line profits. On a bad year, would lose about 2%. So good years were not as good, bad years were worse, right? Hopefully we get indications that things are on the right path. And I think that's what's going to happen. Analysts are not expecting all things to be rosy here. You're still expecting a loss of 17 cents per share. Just some very rough math here would be a total loss. Let's just do 530 million shares. That would be a rough loss of about $90 million to the bottom line. That's not bad compared to where the losses have been with AMC. I mean, this is better by 67.3% year over year. That means the loss per share was like 30 cents, 35 cents last year. So this is definitely a step in the right direction. And I think that will be solidified after earnings. Now, that is just one part of it, right? The commentary, the guidance will also be very, very important. Now, I don't expect earnings to be a negative catalyst. And we've talked about in the last videos, even today, how we really don't have any other negative catalyst. There's a chance we get news that there's going to be a new vote, right, for common stockholders or a larger settlement that comes out before June 29th. But I don't expect this mastery is going to give a negative recommendation or a recommendation that the judge should let this reverse split go through, that parties like common stockholders are accepting of this settlement. That's not the narrative that has been getting sent to the judge. Keep in mind, I don't care what happens ultimately. I think you get the MOS either way. But after earnings, things could get very, very bullish. Now, what happens typically after earnings? Okay, let's go ahead and pull that up. So you have right here the blue, and these are the days that AMC reports earnings. Now, sometimes before earnings, you rally, and sometimes after earnings, you rally. But typically, it's after earnings. Now, last earnings we got, you actually rallied into earnings, and then you sold off, found that bottom, and a lot of this was due to the arbitrage trade, right? AMC kind of killed the rally right here, what they said on earnings with this proposal to dilute shares. This was an AMC killed the rally kind of moment. But before then, what happened? Well, AMC reported earnings back here in November of 2022. The stock actually fell the next day after earnings, about 7.5%. And then you rallied 20% back to back, and then another 2%. So you rallied about 43% all in all. Very sizable. What happened back here? In August of 2022, well, AMC reported earnings. The next day, you rallied about 19% and continued to rally, going from about $8 to $16, 100% rally. Right here, AMC reported earnings, sold off for a bit, hit a low, and then trended upwards until the next earnings, and you rallied. What happened back here in March of 2022? Well, you had earnings. You subsequently sold off for about a month, right? Sometimes it could take a while. And then you rallied from $7 to $21. What happened back here? It was November of 2021. This was the first earnings where you kind of sold off and never came back. That was it. Back here in August of 2021, you had earnings. AMC stock was in the $18 range. It rallied up to about $32. Back here, AMC reported earnings, obviously May 4th, and about a month later, AMC 10x in value. Before then, you reported earnings. March 10th of 2021, AMC stock was around $5 per share. It rallied up to $9 per share. So it's pretty clear. Ever since January of 2021, when you get earnings, typically about 80% of the time, 85% of the time, AMC stock tends to rally after. sometimes, about 10% of the time, it rallies before, and about 10% of the time, it drops after earnings and never recovers, aka this November earnings. So your odds of getting a rally here are pretty damn good. Let's be honest here. Pretty damn good compared to a fall. And I think based off of kind of what we've said already in this video, it's going to be a very bullish situation for AMC stock. And really then it's going to be off to the races, because a part of why shorts are not covering on their short positions right now, even when this trade looks to be an outright loss for hedge funds based off the cost to borrow fees and the equity loss that hedge funds are seeing. Again, $2 billion in the first 3 months of 2023, another $600 million in losses after Q1 in mark-to-market losses in the equity loss, meaning that AMC stock has continued to rally. So they've lost a lot of money here. They cannot afford another bullish catalyst or event for AMC to happen. But if there's that doubt that AMC will go bankrupt without this reverse split, I could make an argument, or it could make sense to me, why shorts are not hedging out their short positions faster or covering on them faster. If that notion gets dissolved this earnings season, that AMC will be just fine regardless, I think that gives you more shorts covering on short positions. Now, I do want to mention briefly, watch for this weekend to see if First Republic does go into receivership. That was a bullish thing last time around for the markets. I'm not convinced it will be a bullish thing this time around, because we're not going to get the same deposit reassurance, right? The banks that deposited $30 billion into First Republic, they're not going to be saved. And that's going to kind of freak out the markets, in my personal opinion. So that's something to watch in this upcoming week. Now, as far as economic data, so let's start off on Monday, and that is going to be May 1st. Keep in mind as well, you've heard this before, sell in May and go away. That's a very widely used saying on Wall Street. Sell in May and go away. You might start to get more just seasonal negative selling pressure in the market, so keep that in mind. 10 o'clock in the morning, ISM Manufacturing PMI comes in Monday. You're expecting 46.5. Last month's reading was 46.3, so things to get a little bit better. That is it for Monday. Tuesday, you are going to get JOLTS job openings, expecting about 9.7 million job openings. Last month's reading was 9.9 million job openings, and this was the largest decline that we had seen, first time under 10 million since pre-pandemic, right? So you're expecting that to weaken a little bit more. Factory orders as well as JOLTS job quits also comes out at 10 o'clock in the morning on Tuesday. Now, that is it. On Wednesday, ISM Services PMI. You're expecting that at 51.5. Last month's rating was 51.2, so you're expecting that to get better as well. And then the Fed interest rate decision. That's going to be at 2 p.m. You're expecting rates to go up by 0.25%. They're almost certainly going to go up by 0.25%. Now, what does the Fed say is next? Do they outright say a pause is coming, or do they say they are still data dependent? That's going to be big. A pause is probably going to be very bullish. Data dependent, probably not going to be so bullish. And then you have the press conference coming at 2:30 p.m., and that is all on Wednesday. Now, on Thursday, the balance of trade for March, that's not going to be a big catalyst at all. And that's basically it. Friday, you have the non-farm payroll report. You're expecting 190,000. Last month's reading was 236,000, so getting worse there. Unemployment rate, you're expecting that at 3.6%. Last month's reading was 3.5%. So again, those are very important pieces of data that can and will move the markets. Now, as far as earnings we have for this week, are you ready? Monday, pre-market, SoFi, Norwegian Cruise Lines. Monday after hours, Diamondback Energy, NXP, Vertex, and Chegg, MGM Resorts as well will report Monday after hours. Tuesday, pre-market, Uber, Pfizer, BP, Marriott International, Marathon Energy, Enterprise Products Partners, and that's about it. Tuesday after hours, AMD, Ford Energy Transfer, Starbucks, and Caesars Entertainment. Wednesday, pre-market, CVS Health, Yum, Barracks, Phillips 66, Generac, WWE, Estee Lauder, and that's it. Wednesday after hours, Qualcomm, Mercado Libre, Etsy, SolarEdge. Thursday, pre-market, Datadog, AB InBev, Royal Caribbean, Peloton, Shell, ConocoPhillips. Thursday after hours, this is the big day. You got Apple, Shopify, Block, Coinbase, DraftKings, Lyft. A lot of my portfolio reporting that day. AMC coming Friday, pre-market. Fubo TV, Warner Brothers Discovery. And that's going to be the big ones. I'm pretty excited about earnings for next week because I have a lot of companies that I invest in that are reporting. Friday, pre-market is actually going to be a huge day investing in AMC, Warner Bros., and Fubo. And I think those could be interesting pickups as well for the long term, maybe before and after they do report earnings. So there you have that one. And fun fact here for anyone that's interested in potentially a new long-term pickup, Fubo TV, the CEO owns almost 14% of the company, has not sold a single share since 2015, even when the stock was $60. It's now trading under $1, and you've seen more insider buying as of recently. I don't know, seems to be a pretty good sign. Nonetheless, let's continue on with the data and the Ortex data behind AMC stock. Now, AMC currently has a dollar amount currently sold short of $727.5 million. Estimated short interest of free float, 26.25%. Free float out on loan, 36%. Shares out on loan, 185 million. Days to cover at 5. Cost to borrow 3-month trailing average, 256%. And 100% share utilization. Cost to borrow max at 359%. Interactive Brokers has a cost to borrow rate of about 205%. Now, let's briefly go back to the charts here. So the average rally in AMC is in between 50 and 100%. Call it average at about 75%. So where would that put AMC stock if we were to see that kind of rally again? Well, on the lower end range, a 50% rally would put AMC roughly at about $8.36 per share. A 75% rally, which would I would say is more average, would put AMC at about $9.60 per share. And more of the better rallies, I'll call it, do about 120%. You're at about $12 per share. So that's the kind of range we could potentially be looking at here after earnings, as far as the historical average with AMC ever since January of 2021. But also keep in mind, there's a lot more, I guess, bullish things going on under the surface here, like the courts, like the short interest being so high, like the days to cover being so high, like the losses that shorts are receiving being so high here, that might make them want to cover a lot quicker. And that could give you an even bigger rally after earnings. So that is going to be it for this video. Hit that like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Thank you guys for watching, and I will see you in the next one.